As Emily said, my name's Steve Marbani. For those that don't know me, I'm a corporate lawyer by background. I was a former PwC partner and I specialize in venture capital and funds management. I'm currently the founder of and CEO of VentureCrowd, and I lead the venture capital and funds management teams here. This session is about the VentureCrowd Fixed Income Fund, which is our internal private credit fund. And the fund, as Emily mentioned, is designed to provide regular monthly income at a fairly attractive rate, 10.5% per annum paid monthly in arrears. Its strategy is to invest in the preference shares of the VentureCrowd Services Group, which is our VentureCrowd Services Australia, sorry, which is our shared services entity for the VentureCrowd Group. But to understand the opportunity, really, it's important to understand who we are and what we do. Some of you may be familiar with that, but for everybody else, I want to take you through really quickly what the business does, how we make money, which obviously ensures the payment of the monthly interest, and how we manage liquidity in the fund to ensure that you're able to redeem your investment at the end of the term. This is not an equity investment. It's effectively it's a fixed income investment with a fixed term. So whilst the strategy and the plan and the growth and the success of the VentureCrowd Group is important to the security of this investment, this is a fixed term, fixed income investment. So I'm going to start by talking you through some of those things. The slide that you're looking at is a really simple snapshot of what we do. VentureCrowd is a digital investment platform for alternative assets, and we are focused on four verticals: venture capital, property development, private credit, and managed funds. Our mission is to make high growth, high yielding private assets in those four verticals available to as many people as possible by providing seamless digital access and relatively low investment amounts. It's been an incredible couple of years for us, and there's been a lot of hard work by a very dedicated team, and we are now at the most exciting stage of our business, and that is the stage of scale. Last year at South by Southwest, we launched our most innovative version of our investment platform technology to date. And what we've basically done is we've taken what we see as the inefficiencies in the private capital market, and we have broken down every step of the capital raising process, and then we have digitally enhanced it using data science, using digital tools to make every step faster and more efficient than before, and putting that technology directly into the hands of our founders who are running private companies and raising capital at different stages of their business from seed all the way through to IPO. We've even built a crew of proprietary AI agents who have been trained with 10 years worth of VentureCrowd campaign data and collateral to do things that once would have taken experienced financial services professionals in various fields days to do more accurately and in seconds and for free. And now founders can go from launching a campaign to cash at bank in 3 months, and they can do the entire thing digitally. If we can go to the next slide, please, Em. So, and we know that process works because since we've started, we've raised over $330 million for over 150 projects, distributed over $30 million in income distributions to investors in our income funds, delivered venture capital returns, exits of up to 295% with more forecast for this year, and property capital returns of up to 40%. So we know the system works. We've spent a long time building the infrastructure to get us to this point. We now have 78,000 registered members, over 4,500 certified wholesale investors. They've invested, as I said, over $330 million with us over a range of projects. And we're proud of the returns that we've been able to deliver to date. More importantly, we have moved well beyond a fintech startup to a business that is in the process of scaling. In FY24, we generated gross revenue of just over $6 million, $6.02 million. And last year, the year ended 30th of June 2025, we increased our gross revenue to $7.5 million. That is a year-on-year increase of 25%, and that's something that we are very proud of in what was I think, widely accepted as a very difficult year. If we can go to the next slide, please, Em. I want to stay on revenue for a moment because obviously two of the questions that you'll be considering for yourself is um, how comfortable are you with the ability for the business to pay your interest as and when it falls due? And how comfortable are you that we've got a liquidity strategy which enables you to redeem at the end of your term? In relation to interest, we have intentionally built a business model that has a number of pillars and a diverse set of revenue streams. This is very intentionally designed to mitigate the risks that are associated with the cyclical nature of investment markets. So investors fall out of favor with property or venture capital as they have done in the past. They will often turn to a different kind of asset class, and quite often that will be secured fixed income, for example. In our business, as I mentioned, not only can we facilitate, originate, and distribute venture capital deals from private companies that are at the seed stage all the way through to the IPO stage, but we are operating in the origination of property development deals that allow us to package up finance for property development projects, everything from equity through to mezzanine debt, through to preference equity, through to first mortgage. We can provide private credit opportunities, fixed income opportunities across venture and property. And then, of course, we have our managed funds business, which has a more stable, annually recurring set of revenue streams. And then you add to that the much more scalable, highly profitable revenue streams that will come from the delivery of our technology rollout this year. And you've got the makings of a very rich, very diverse, very broad revenue base for the business so that we can withstand and mitigate cyclical shocks. And there are always cyclical shocks in the investment market, which is why we've built a business with a number of different verticals and a number of different revenue streams. We've got 2 financial services licenses, and inside those 2 Australian financial services licenses, we have the authorizations to provide a number of different financial services, not just acting as a crowdsourced funding intermediary, which of course we do, but also to be able to manage and operate and distribute managed investment schemes that are either single assets, such as an investment directly into a private company or an investment directly into a property development project, through to managed pooled funds like the Sydney Angel Sidecar Fund, like the Health Tech Fund. And to give you an example of how well received those various financial products are in our business, the Sydney Angel Sidecar Fund, when we launched that, it was targeting a tranche 1 raise of $1 million. That $1 million was secured within 3 hours, and then within a week we closed that first tranche 350% above its target tranche raise. So it closed at $3.5 million when the target was 1. So our investor base is interested in all sorts of alternative assets. They want to see opportunities in venture. They want to see opportunities in property development. They want to see private credit opportunities, and they want to see, excuse me, managed funds. And we also know that where investors come to us for one of those particular areas, because that is the area they tend to be more comfortable with, such as, venture capital investors or property investors, they will typically, off the back of the trust with the platform and the ease with which we are able to digitally deliver this range of products, will find themselves beginning to diversify their alternative asset portfolio through the VentureCrowd platform by investing in, things in areas they would not have otherwise considered. All of that is designed to highlight and a very important part of our risk mitigation strategy, which is numerous key verticals and a wide range of revenue streams to give us the ability, as I said, to withstand the shocks of a cyclical market. Moving forward, we have a very ambitious growth plan for this financial year, and we expect it to be an even better year for VentureCrowd than the last 2, notwithstanding the growth. So if we go to the next slide, please, Em. Uh, on the technology front, we have insourced our entire technology team, and we have on staff expert technologists in data science and in artificial intelligence. We don't outsource any of that because we want to own the intellectual property that sits behind some of the key digital solutions that we are building. We have also appointed Jesse Arundel, who is Optus's head of artificial intelligence solutions and strategy, and he was the former head of emerging technology at Commonwealth Bank and ComSec, to our advisory board to guide the adoption of agentic AI tools for the private capital markets. And Jesse was recently quoted in this article announcing his appointment as saying the following. His words are these. Coming from a financial services background and operating in a highly regulated environment, I've long admired VentureCrowd's mission to open up and democratize private market investment. What VentureCrowd is building with agentic AI tools has the potential to redefine how private capital is raised, allocated, and scaled. I'm excited to help guide the next phase of its evolution, and we're really grateful to have someone of Jesse's expertise and caliber on board, guiding Diego Mogollon, who's our CTO, and our very, very capable tech team as they embark upon this ambitious next 12 months of technology rollout. And then finally, just going to the fund. So if we can go to the final slide, please, Em. So this year we're targeting $11.7 million in revenue, which will be driven, as I said, in part by the rollout of our new technology product, which we genuinely believe will be a game changer for the industry. There is nothing like this in the market, and we're very excited to see how the market receives it. You can see there the key details of the fund. I won't necessarily labour any of these points. These are all available on the website and in the information memorandum. But very, very simply, our trustee company, VentureCrowd Nominees, is the trustee of the trust. The trust details are there. The coupon rate is a targeted 10.5% per annum paid monthly in arrears, 12-month term, minimum investment of $10,000. Again, very strategic. We want to be able to make the fund available to as many people as possible. We're not necessarily interested in setting, minimum investment sizes of hundreds of thousands of dollars. What we're trying to do in our business is to democratize access to private assets, and this is one way that we do that by having a relatively low minimum investment amount. I'll leave it there in terms of the presentation. I hope that's giving you some kind of color. I am an investor in this fund personally. I invite you to join me.